Well, welcome back, everybody. So, we're going to go ahead and kind of review what happened with Google stock as they had their earnings the other day, and stock price dipped a little. Expectations weren't exactly met. So, let's go ahead and take a look here. I've got a couple articles we'll just kind of pan through as they kind of reviewed most of what happened. So they just talk about how they had, their record-breaking 2021 year. And if you actually look here, 2022 Q1 compared to 2021's Q1, revenue is up 23%. And that's reaching about 68 billion. That's nothing to laugh at. That's pretty darn good. But they also had a phenomenal previous quarter, so expectations were very, very high. And again, I've skipped down to this part of the article here where you can see Q1 revenues throughout the years here. Pretty incredible. Back in 2010, it was 6.8 billion, and they've literally climbed this high in 12 years where it's a 10x in revenue. But, well, 2021's Q1 revenue was 55.3 billion. 2022, 68 billion. Couple other things to point out from this article. YouTube ad revenue was up, reaching 6.86 billion, but showed slower growth than what it's been. And you'll see why that's going to play a role in a moment. And one more thing I want to look at as we scroll up here. With expenses up compared to 2021, net profit dropped to 16.4 billion compared to 17.9 billion. You'll see why that's going to matter in a second as well as we skip over to the other article that I had found. Okay, so let's get into the biggest thing that caused Google to go down, and this was pretty much viewed as a bad earnings. As everybody knows, earnings per share, EPS, always has a pretty big effect on how a stock does, and it was 24.62 versus the 25.71 expected. And this had everything to do with the fact that their cost compared to 2021 was upped. Now, as I just said, EPS missed due to the upped cost they had so far for 2022. That's why they missed earnings per share, and that's the main reason for the drop. Now, revenue did miss by literally a sliver, but basically it was met. It missed by literally a sliver. Pretty much 68 billion was expected, and that is pretty much what they hit. They only missed it because the expectations for YouTube revenue was a little bit higher, and they missed it. They would have beat it had it met what they thought it would be. Okay, so we've reviewed some things from the article. The basic lowdown of Google's earnings is they missed revenue by a sliver. Basically, they met it. They missed it by a sliver. That's not going to affect anything. What did make the stock drop is that the EP estimates were not met, and by a fair little margin. But look, to me, this is stupid. This is a one-quarter thing. The story has not changed for me at all. If you've been investing long enough, or you can look at the history of a stock to know, just to learn of that, companies miss on EPS all the time. First of all, companies have bad years. But a lot of the time, in my opinion, a company as good as Google is not going to have so many bad years. But every company has a bad quarter. And guess what? This was a quarter where, personally, I don't think it's a terrible quarter, but this was a quarter that was not phenomenal like previous ones had been for Google, or at least in terms of the expectations put out. One quarter does not define a company, especially one as strong and stable as Google. I personally think Google is in a loading zone here. When I first started looking at it, it was around around 2,500 a share, and I thought it was a really good deal there. Almost every company is going to have a quarter, especially when they were doing really well. Every company is going to have a quarter where they miss an earnings per share estimate or a revenue estimate. Plus, because of the EPS expectation being missed, guess what? Now expectations are going to be lower for the next quarter, quarter two, right? This always happens. So now expectations will be lowered a little bit. And whatever that up in cost was may not be as significant for this next quarter. And they could have a blowout quarter again. So it's times like this where they missed on, in this case, an EPS estimate, and the stock sells off. This is the time to buy on a great company like Google. We're not going to do another DCF model for Google in this video because my DCF model, in my opinion, stands. I don't feel the need to do another one. Again, alone, compared to Q1 2021 versus this quarter now for Q1 2022, it's about 23% revenue growth, which is really, really good. For reference, my last DCF model I was extremely conservative and used only 10% revenue growth year over year. And I'll link the video in the description, and I'll put it right here in the video somewhere just to kind of give you the lowdown. I did a DCF model on Google already at 10% revenue growth over the next 5 years, which I think is very reasonable for a company like Google. And guess what? Based on a 12% rate of return that I require, or 12% discount, Google's fair value came back at over $3,400 per share. So am I worried about one stinking quarter of EPS being missed? No, because I guarantee they come back the following quarter, in Q2, and beat the expectations because they're going to be lowered. One quarter for a company does not matter, especially when personally it wasn't an awful quarter. Revenue was pretty much met. EPS missed by a little bit. To me, that doesn't mean anything to have one quarter that missed by a little bit. Personally, I think this provides an opportunity to really buy a great company at a great price. Well, okay, everyone, let me know your thoughts on Google down below in the comments. Is this a company you own? Is this a company you're buying? Is this a company you're thinking of buying now? Let me know all your thoughts on what I think is a great company. And that's all I've got for you in this video, so I'll see you in the next one.